Happy Friday, finally. Market has been feeling like a jab kind of exercise, but here we are. We are going to look at Danaher, NextEra Energy, Union Pacific Corporation, AT&T, Freeport-McMoRan, Dow and AB today. With the number of companies increasing, we have decided going forward to remove the part where we were flagging which algorithm trades which ticker better. That information is readily available on MarkSign Algo platform for free. We will just stick with the earnings calls for now.
Danaher announced results on April 21, 2022. Interesting facts picked up from the call. And so if you look at the 2-year stack for Q1, we're in the 35% to 40% growth area, which we think is very robust and more than representative of what is going on in the market, and think that compares extremely well. And maybe just to give you a color on the sizing of that headwind, I mean, right now FX is going to be a 35-cent EPS headwind year over year, and that's a pretty meaningful number for us here during the year. And I've talked about this, but you know that the project pipeline for monoclonal antibodies is 50% larger today than it was 5 years ago for cell and gene therapy. Our combination tests for COVID-19, flu, B and RSV represented approximately 65% of the 17 million respiratory cartridges shipped in the quarter, with COVID-only tests accounting for approximately 35%. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Was this supply chain inflation an impact in Q1? And kind of how do you think about China for the full year, since you were expecting a nice rebound and giving Q2? Power order trends. Any change to the growth expectations for the year? Can you just talk about the durability of the growth you're seeing there? You expect all that China business to come back, or you think you'll see stronger growth in other regions offsetting it? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment is 100% positive. About investments, the sentiment is 86% positive. About growth, the sentiment is 77% positive. About costs, the sentiment is 50% positive.
NextEra Energy announced results on April 21, 2022. Interesting facts picked up from the call. And so what the industry would be forced to do, perversely, is actually go back and buy panels from China, because the tariffs in China are known, and China is the only country in the world that would have panels available to sell, because as we said in our remarks, the US panel manufacturing industry, which is incredibly small, again, even at full capacity, it only has the ability to satisfy 10% to 20% of the entire US demand. As only about 5% of our generation is currently produced by renewable energy, I believe that FPL already is the best utility in the nation, and yet we see significant cost reduction in incremental capital investment opportunities at FPL over the next several decades that can further improve our industry-leading customer value proposition by delivering clean, low-cost energy solutions for Florida customers. In light of these 4 prior rulings, the reliance on them by the industry, and the substantial technologically sophisticated processing that occurs in the Southeast Asian countries, we believe it will be difficult for the Commerce Department to conclude, under its circumvention standards, that circumvention of the 2012 tariffs is actually occurring. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So could you just talk about how that process works and why to actually set the tariffs, so I better understand why it would be that long? And then, if I'm hearing you right again, I know you keep talking about Chinese imports, but is that the answer here in lieu of having clarity effectively, and this is a matter of timing and pivoting into a Chinese supply solution in some form or another, or at least creating your own domestic supply rapidly? Do you think they'll rise enough that you can protect your returns on incrementally new signed renewables contracts? And I was just wondering, just on the pace of new signings, has that slowed down significantly since this investigation started, and would the preliminary determination potentially be a bit of a relief valve? Or could it take longer than that to start to maybe kickstart the project signings again? Last, we used
Union Pacific Corporation announced results on April 21, 2022. Interesting facts picked up from the call. Let's take a closer look at each of these business groups, starting with bulk revenue for the quarter was up 21% compared to last year, driven by a 12% increase in volume and an 8% increase in average revenue per car, reflecting higher fuel surcharges and solid core pricing gains. So one thing that we're in the middle of right now as an industry is trying to get to a place where two people in the cab of the locomotive are not mandated and negotiate with our union partners on moving one of those people onto the ground. Rising fuel prices throughout the quarter. The lag on our fuel surcharge programs and widening spreads between WTI and highway diesel fuel prices negatively impacted our quarterly ratio by 80 basis points, while adding 12 cents per share. Capital spending remains at $3.3 billion for the year, well within our long-term guidance of below 15% of revenue, and we remain committed to an industry-leading dividend payout ratio and share repurchases in line with 2021. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So what are some of the other capacity constraints that are on the network right now? Eric, I guess, can you talk to the fluidity situation in Long Beach, and has that improved in any drastic way? And I know things are a bit unprecedented, but do long-term, broader adjustments to how you think about precision-scheduled railroading need to take place, and is the resiliency after going through all that a surprise to the negative to you overall? Will you have enough capacity by the end of the year to accommodate that, or will there still be incremental growth required in resource into 2023 to accommodate those intermodal share ones? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment is 100% positive. About investments, the sentiment is 71% negative. About growth, the sentiment is 77% positive. About outlook, the sentiment is 75% positive.
AT&T announced results on April 21, 2022. Interesting facts picked up from the call. We continue to expect about $4 billion distribution from DirecTV for the year, so we do expect some moderation given that one is a seasonally low quarter for free cash flow and many of the factors impacting free cash are not expected to repeat. We remain confident in the guides we provided you during our analyst data to achieve free cash flow in the $16 billion range for the year and on a standalone basis. This decline was driven by $1.2 billion in lower year-over-year securitization of receivables in advance of the transaction, $600 million in higher cash content spend, increased investments in HBO Max global footprint and ramp up for the CNN Plus launch, as well as NHL right payments and other working capital changes. A team with unparalleled talent and one of the few truly global direct-to-consumer players is evidenced by the continued growth in HBO Max and HBO subscribers, which closed this quarter at nearly 77 million globally, up 3 million from last quarter and nearly 13 million year-over-year. The completion of the Warner Media transaction also marks a significant step towards achieving our established goal for net debt to adjusted EBITDA in the 2.5 times range by the end of 2023. First, we plan to invest in our strategic focus areas 5G and fiber as previously shared. We expect standalone at ANDC capital investments of $24 billion in 2022 and 2023. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. Thanks for the color there, but how much visibility do you have in the improvement in the margins and the declines there and any other color on that sort of rationalization of the portfolio you guys keep talking about? And can you frame how the economics of these mobile postpaid phone customers are evolving when you consider the ARPU churn as well as the cost of acquisition? Is there any impact from your own 3G shutdown on the reported ads? How much password sharing did you see with HBO in the US? And then secondly, in terms of fiber, if you think about higher pricing, are you still seeing that kind of the penetration rates after year 1 and year 2 that we've historically seen when other companies have built out fiber? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About prices, the sentiment is 66% negative. About investments, the sentiment is 77% negative. About costs, the sentiment is 83% negative. About growth, the sentiment is 75% positive.
Freeport-McMoRan announced results on April 21, 2022. Interesting facts picked up from the call. When things started to improve in late 21, we had a spike in cases in January and February in Peru that did have an impact on our mining rates in the first quarter by about 10%. Situation improved significantly in March. We expect to reach our targeted meal rates of 400,000 tons per day in the balance of the year. These numbers were built off a copper price assumption that was 25 cents per pound above the prior plan. but we're looking today at 4.70 copper current market with a cash cost of $144 estimated for this year, which will generate very strong margins for us. We have insignificant changes to our prior guidance for copper sales for 2022 and 2023 in the 1% range that principally reflects the Cobra downtime experience in the Americas earlier this year and some timing changes at Grasboro between 2023 and 2025. And now with 40% of the copper coming from Chile and Peru and those countries going through political discussions about the direction of how they're going to be treating the industry, that's clearly a factor that's out there. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So the question is, if we think about changes in the copper price, should we assume that a 25-cent increase in the price fully translates into that $1 billion? I'm just a follow-up to that and going back to the China cycle, obviously many years ago, but was the cost inflation that you saw then very different from what you're seeing today? In other words, do you think that the war is having a disproportionate impact on cost inflation today, or are we just seeing generally typical cost inflation that we get in bull markets and commodities? And a bit of a long shot here, but how much do you think it could increase overall production by globally? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment is 57% positive. About investments, the sentiment is 60% positive. About costs, the sentiment is 72% negative. About growth, the sentiment is 85% positive.
Dow announced results on April 21, 2022. Interesting facts picked up from the call. Our alcohol capacity and other efficiency investments are also on track to start up this year and in total are expected to generate more than $50 million in run rate EBITDA with returns greater than 20% in order to support the accelerating demand growth across pharma, cleaning and energy sectors. And then the unique to Dow tailwinds that we continue to work on. We've got more than $1 billion of unique to Dow cash tailwinds that we're working on still this year that haven't come through. All in all, by 2025, we're projecting a cumulative underlying EBITDA improvement of approximately $2 billion, driven by projects like incremental high-margin polyethylene and functional polymers capacity to serve growing demand for flexible packaging, debut necking projects to enhance our mix toward polyurethane systems serving mobility and consumer applications, and new capabilities to formulate differentiated silicones, including silicone adhesives for next-gen electronics, mobility and infrastructure applications. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So does the guidance factor in these polyethylene price hikes ticking? My actual question is for Howard just to talk about the pension just given if rates have already gone up a lot year to date, and what with most expectations for what the Fed is going to do for the rest of the year. What does that do in terms of your pension and what opportunities could that present for you to materially reduce that liability? So would you be close to the past peak margins or would you need to get more price increases to get there? My question for you on that is, are you seeing some demand pull for greener sources of polyethylene that might enable you to sell those products at a higher price? So could you just give us a quick outlook on MDI and then also maybe if you could discuss the certain situation that you see as far as inventories and polyethylene? We know that there's some tied up in supply chain, but do you see that alleviating over the next couple of months? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment is 80% positive. About investments, the sentiment is 71% positive. About costs, the sentiment is 72% negative. About growth, the sentiment is 85% positive.
ABB announced results on April 21, 2022. Interesting facts picked up from the call. So overall, the demand is and for me really to see what is the underlying happening in the market. I think it's very interesting to look at the service market, which is quite a big part of us, over 30% of our business, and that was up 15%, which from an aftermarket, it shows very much strength and activity in the market. We saw no real difference in the underlying market pattern towards the end of the quarter compared with in the beginning. It was a strong throughout the whole period. Revenues improved at a good pace of 7%, driven by positive volume growth as well as good pricing execution. One of the areas where we've seen enormously high growth, which is, of course, a very small part of APB, that is the e-mobility, where the orders are doubled as high as they were last year. And then we have more than 20% order growth comparable for the rest of the year. Here are some of the questions that were asked during the earnings call, to have a better idea of the discussions that were happening. So do you still see that has possibly up year on year like your guidance for the P&L implies, or would we see this year a bit of a weaker than normal cash conversion overall? Given the order strength in Europe, How are you seeing your European customer base developing, both what you saw in the first quarter, but also what you're expecting for the next couple of quarters? If you look at your exposure to energy-intensive industries in Europe, chemical fertilizers, some of the downstream businesses, what do you expect here to happen between customers having to invest more in energy efficiency as a positive on one side, but potential risks from them just not being competitive and stopped producing at all, particularly if we get any gas rationing or something like that later in the year? Second question, just quickly, have you seen any impact or sort of demand increase from onshoring or any of your customers moving production from China to Europe or us on the back of the issues we've seen in the past couple of months? Last, we used sentiment analysis to see how the analyst call sounded about specific topics. About sales, the sentiment is 100% positive. About investments, the sentiment is 100% positive. About costs, the sentiment is 71% negative. About growth, the sentiment is 69% positive.
I hope you found today's updates helpful. If you want to learn how to build your own algorithms, you can check our free YouTube channel where we post hands-on courses about how to build them, or get the book that is looking at multiple types of investment algorithms, or feel free to check our small group customized lessons for something more personalized.